Hi there, this is Alvin from Dr. Wealth. Today's video is about Alibaba and I'm going to give you 6 reasons why Alibaba share price can continue to go up from here. So let's start with reason number 1. There are more big name investors backing Alibaba. And the first big investor that we know has been backing Alibaba for the longest time is Charlie Munger. And via his company Daily Journal Corp, he has amassed a $35 million worth of Alibaba shares, or 16% of the investment portfolio in the company. And he is a long-term investor, so which means that he's not likely to trade this position, gonna go in and out pretty quickly. Yes, he did sold half of the position some time ago, but he is still holding a substantial amount, which is $35 million worth. So he is the first known big investors that's backing Alibaba. And now recently, there's a new one called Ryan Cohen, much younger than Munger, of course. And he has built hundreds of millions of stake in Alibaba. The exact number is not known yet. And this Ryan Cohen, we might not know him that well, right? He is the co-founder of Chewy, one of the largest online pet retailer in the US. And he sold the business, he made billions there, he made his first pot of gold, and then he went on to be a largest individual investor in Apple. And he also was involved in the meme stock GameStop during the heydays. And he has gained a very large following of meme stock traders, which means that now we have a group of younger investors or traders who are also looking at this Alibaba stock, which means that the demand for Alibaba shares can go up from here. So let's move to reason number 2. There is aggressive share buyback that's going on in Alibaba. And so Alibaba has aimed to buy back about $40 billion worth of shares. Alibaba has been upsizing this share buyback over the years. And it might be because Ryan Cohen has been behind the scene pushing for this share buyback. And in fact, he thinks that Alibaba can afford a $60 billion buyback. And that's 50% more than the $40 billion target right now. And current market cap of Alibaba is about $310 billion. So which means that a 60 billion share buyback is equivalent to almost 20% of the market cap. That will increase the value per share tremendously. So let me explain a little. So before the share buyback, Alibaba will have $60 billion worth of cash and 2,688 million shares. After the share buyback, assuming that the value of Alibaba shares is worth 2 times of the current share price, which is not demanding because $600 billion for one of the largest company in China is actually not demanding, right, in terms of the market valuation. So currently it's 300 million. So we can say that maybe it's worth double of what it is now, right, or a share price of about $240. Okay, so if that is the case, after the share buyback, it would have get back about $120 billion of worth of value. So using 60 billion cash, buying 120 billion worth of Alibaba shares is a no-brainer because it's undervalued. In terms of share outstanding, after the share buyback has been done, the number of shares in the market actually reduces. So let's say 20% of the shares got bought back, right? Because 20% of the market share is equivalent to $60 billion. And that would mean that Alibaba has about 2,150 million shares left over. I missed out the M in the slides. It's not just 2,150 shares, 2,150 million shares. And which means that the value per share goes up because the numerator goes up, the denominator goes down. So why a share buyback program can help the investor increase their value. Number 3, China is reopening. So we all know that China has abandoned its zero COVID policy, and this zero COVID policy has really done a lot of damage to the economic growth, right? It was just 2.8% growth in 2022 due to the lockdown. That is the worst number that China have seen since the 70s, minus the COVID year in 2020, okay? So that is the worst, right? So that is probably one of the reasons why they wanted to get out of this zero COVID policy and focus on economic growth. And it is expected in 2023, China growth will recover and the target should be above 5% by the Chinese government. So if that is the case, with higher GDP, likely the companies will have to generate more revenue, sell more goods and services. And Alibaba, being the largest e-commerce company in China, is definitely going to play a very big part in this recovery. So we will also expect Alibaba's financial figures to improve from here as well. Reason number 4, end of tech regulations, right? Because the Chinese government has been giving clues and assurances that the regulation is coming to an end. And the latest come from this guy called Guo Shuqing. He is the chairman of the China Banking and Insurance Regulatory Commission. And he did make an open statement and say that the special campaign to rectify these 14 internet companies, right, has been completed. There's another boost to the end of this regulation that is happening in China for the past 2 years. Add on, there's this Central Economic Work Conference that concluded in December 2022, and a lot of the representatives have also put in the support, put in a good word for the internet platforms, and it is likely that the recovery of China is going to be very dependent on Alibaba, Tencent, and the likes of them. Another sign of the end of regulation is also the homecoming of Li Jiaqi. So he is also known as the lipstick king, a guy selling lipsticks. And he returned to Taobao just before the 11/11 sale in 2022, and he broke record. He sold $2.9 billion good during a pre-sale. It's not even the actual sale itself. So with all of these influencers coming back, it's a good sign, because previously some of them were targeted due to tax evasion, like via for this Li Jiaqi, it was allegedly about a tank. Okay, so now he's back. Likely the scrutiny is going to be lessened as well. So all these add together tell us that the regulation is indeed coming to an end. Reason number 5, the lower delisting threat. If you recall, the US was trying to delist some of the Chinese company if they refuse to open up their books for audit, okay, by the US authorities. So there's this PCAOB, which is the accounting board, the supervisory board in US, that's supposed to do these audits checks on the Chinese companies. And for the longest time, the Chinese government refused to allow this US counterpart to check the books. But they have since agreed, and for the first time in history, the PCAOB chair said that the board had the complete access to the Chinese companies. There was no restriction, there was no obstruction, there was no obstacles. So that was a first, and it was very encouraging, and found some deficiency. But the good thing is that she said that it is not unusual during a first-time audit, and it is very similar to what they found in other countries around the world. So in other words, it is very likely the report will come out and say that, okay, there are some areas of improvement, but there is no red flag or major red flag that would cause the companies to be delisted. And once they pass this audit, it is very likely the company can continue to trade in the US markets. And Alibaba was among the first batch of all this audit work. Likely they are going to escape this delisting threat altogether. Reason number 6 is that there is a potential IPO of Ant Group. We all know that Ant Group failed the IPO listing, and until now it's still a private company. But the signs of Ant Group going IPO is staging up nicely, right? For one is that Jack Ma has lost controlling stake of Ant Group. So to a lot of people think, hey, this is bad news. How can this be good news? But to me, this is a piece of good news. So the reason being, Ant Group had some of the political enemies having big stake in it, and if an IPO would eventually benefit these people in terms of billions of dollars. So Jack Ma was seen as an ally to this group of political enemies. So now with Jack Ma losing a major control of Ant Group, that would ease the fears of the Chinese government and likely to grant Ant Group the necessary license to operate. Okay, so this is why I think it's more good than bad. And we also start to see more good news coming out for Ant Group, right? There was a rumor to say that Ant Group is going to be fined over $1 billion. The fine will be among the top 3 fines that has been slapped on Alibaba TT as well. Okay, so but this is also good news because it is a sign that the regulation is coming to an end. And there were rumors that once this fine is paid, the license will eventually be granted to Ant Group. And in fact, recently the Ant Group also got approval to expand its lending business. So the government is granting more and more space for Ant Group to operate, and that will eventually lead up to a full licensed financial organization and, of course, an IPO probably earliest at the later half of 2023. So these are the 6 good news that I wanted to share with you, right? So for Alibaba shareholders out there, hang in there, because I do think that the bad times or the worst times are over and it's time to look forward for a brighter future. So the 6 reasons, if I can repeat, why Alibaba share price should go higher is because first, there were more investor backing. Now, not just Munger, but you have Ryan Cohen. And second, there has been aggressive share buyback, and there's a possibility that you'll upsize by another 50%. And third, China's reopening, where Alibaba will play a very big part in generating the GDP growth for China. And fourth, the tech regulations has come to an end, and Alibaba would be now able to focus on growing the company instead of fighting regulations. And number 5 is that the delisting threat in the US has diminished, and it is likely Alibaba is going to stay listed and trading in the US stock market. And lastly, there can be a potential Ant Group IPO at the end of the year, and Alibaba, being a substantial shareholder of Ant Group, will benefit from the IPO itself. So I hope now you get a better idea of what's going on in Alibaba. Give me a thumbs up for this video, and remember to subscribe to the channel, share this video to more people so that more people can benefit from this, and I hope to see you in the next video. Goodbye.